we don't realize that we are just one medical bill or like one tragedy away from all of those goals being faded away.
Protection products are different from savings products. You pay your premiums for the next, say, 40, 50 years, and then let's say you're going to get nothing after the 50 years if you survive. Suddenly, the value proposition falls off.
What's your opinion on LIC? Why does it have such a bad reputation in insurance industry?
There's about 50 ways in which insurance company could reject the first claim, reject the second claim, reject the third claim. Most misselling happens because even the agent has no clue about this. There is this feature called as unlimited restoration. When you think about something like a critical illness, don't just think about hospitalization expenses. Think about when you make a claim, bad idea. Trust me, they have so many ways in which they can figure out if you've hit a pre-existing illness or if it's not mentioned, it will be denied. If I die at this very moment, the payout from the term insurance policy should contend for all the expenses that may come up for the next 25, 30 years. You cannot trust the insurance company to treat your claim badly. I believe that.
Hi everyone, welcome to another episode of Power Talks. Today we have with us Shrehith Karkera, the co-founder of Ditto Insurance and Finshots. So Shrehith, I think all of us are super invested in what is the right instrument and, planning our retirement goals. But more often than not, we don't realize that we are just one medical bill or like one tragedy away from all of those goals being faded away. So in your opinion, as someone who has been in industry for so long, why do you think India is so underpenetrated even till today?
I think one of the biggest reasons is because health and sort of, life insurance as a concept did not take off truly until perhaps the early 2000s, right? And the reason is because people know about insurance, people know about LIC, but primarily insurance was seen as sort of this savings instrument, right? It was primarily seen as a way to conserve, preserve, and perhaps grow wealth to a certain extent. But beyond that, people never looked at it as sort of this protection product, right? Which is what insurance is.
Yeah.
And I think that changed moving into the early 2000s. But I think it took a lot of convincing for agents and sort of incumbents in the industry to even tell people that, look, protection products are different from savings products. For instance, you could go to my dad and you could tell him, look, there is this term insurance product. You pay your premiums for the next, say, 40, 50 years. And then let's say you're going to get nothing after the 50 years if you survive. Suddenly, the value proposition falls off. He's never going to commit to a term insurance policy. And so that convincing aspect, right, it took a lot of time for people to understand that even if I don't get anything in between, right, and I only get if I, say, for example, pass away, the idea that something like that could be useful, right? So it's a two-sided problem, and I think that sort of got us to a place where now we still have low insurance penetration, and people, even though they were sort of, one medical bill away, they still feel like insurance is maybe not the best option.
Yeah. No, as you rightly said, right, this concept of you'll not get anything if you survive, right? It's the insurance has been sort of said like a protection cover and like savings plan and not really like an expense, which it should have been. I think, and speaking from our audience perspective also, while, suppose we are now aware of, okay, we should try to protect our families in case of any emergency. I think there's also like a plethora of plans out there, and I'll talk both on health insurance and life insurance side, that you often get so overwhelmed, what to do, what is the right one for me. So what do you think are like the mistakes that people are doing, and if you would recommend some 2 or 3 things only that one should look at while buying an insurance, what should that be?
All right, so let me first talk about health insurance, right? Because I think health and life are sort of, term insurance, two completely different products, and people have to view them as completely different products as well. I think one of the biggest things that people do is they look at it almost as if they're buying a cell phone, which is the wrong approach entirely. Because with health insurance, the features don't count for much. Let me give you an example. So there is this feature called as unlimited restoration.
Okay.
What it says is, if you buy a health insurance policy and if you have a cover of, let's say, 10 lakhs, irrespective of how many claims you make this year, I'm going to keep refilling your cover. So what that means is, let's suppose you make a claim for 5 lakhs. Your now, total cover should end up at 5 lakhs, right? Because you've used up the 5 lakhs already for a claim. The insurance company will then tell you, look, I'm going to refill it the next time you make a claim. So you'll have 10 lakhs again, right? And this feels like a very compelling feature, right? You're like, oh, 10 lakhs and I almost get in unlimited cover. It's not unlimited because if you have a 25 lakh claim, well, you still only have 10 lakhs, but still it feels like it, right? Here's what they don't tell you. There's about 50 ways in which insurance company could reject the first claim, reject the second claim, reject the third claim. Even if they approve the first claim, they can reject the second claim based on some sort of technicality, right? And the fact of the matter is, people just focus on the features and don't focus on how could I possibly safeguard myself from not getting into this quagmire where I'm constantly my claim is being rejected based on some frivolous grounds. And one of the big things that people miss is the simplest thing, which is something called as a good health declaration. I'm sure that people don't remember it, but if they've signed a health insurance contract, they'll probably do something called as a good health declaration saying that I'm fit and fine right now.
Okay.
Simply saying that, look, outside of the things that I've disclosed to you, right, there's nothing wrong with me. What if I told you, let's say 8 years ago, you had an appendix surgery, right? And you never thought about it since then. It was a 2-day procedure, and then you're buying insurance right now and you forget to disclose it, right? You're just like, it didn't even occur to my mind because I'm perfectly fine right now, right? The good health declaration would have you sort of, at least the insurance company will now have grounds to deny your claim because you did not disclose the illness 8 years ago. So one thing that people forget is that when you are dealing with health insurance, you have to understand there's a lot of nuance involved. That could be with your disclosures about your medication, about your pre-existing illnesses, how to classify them appropriately. Should I classify them? Should I not disclose it? And a lot of these conversations completely get missed, right? And that happens if you're buying online directly, or it can happen through an agent. Not because the agent, I don't want to say that the agent is trying to missell you, right? Because I know there's a problem of misselling, and there's probably 5 to 10% of the agents that deliberately missell. But most misselling happens because even the agent has no clue about this, because they don't see that many cases. Like, how are you going to treat a new case, some disease that you've never encountered? You have no idea how to deal with it as well. So once you've sort of set that aside, once you've done all the disclosures fairly, you've filled out the application in a true and honest manner, then we can talk about the features and the benefits that come with it, and perhaps even the price, right? But I think you asked for a few things, but I think this is one of the biggest things that people miss, and it sort of catches them off guard eventually, because if you don't get the claim, what is even the point of buying insurance, right?
Yeah. Oh, absolutely. And once we have disclosed this entire thing, right, now there are also, bunch of add-ons that you get in a policy, right? Different features that you said.
Right.
What are like the key things that I should look at? I am a 25, 30-year-old.
Right. So with health insurance, I think the first thing that you'll probably have to do, especially for young people, is that it's often very, very sort of inexpensive to buy a comprehensive policy. And I say inexpensive in the context of the kind of benefits that you can perhaps get for the price that you pay. It's not necessarily that it is completely inexpensive. It's just that the value for money is definitely there, right? When you buy, say, for example, a 10 lakh cover with a lot of sort of, comprehensive benefits like no co-payment, no room rent restrictions, making sure that you have a good loyalty bonus. So long as you keep continuing with your policy, you want the insurance provider to also keep beefing up your cover, right? The more years you keep paying your premiums, the more benefits you generally accrue, and any insurance company that does that without clawing back your bonus, etc., that's sort of a good thing to have. Now, from an add-ons perspective, once again, it depends on individual proclivity, right? So if you say, for example, as somebody who is planning for a pregnancy, let's say 2-3 years down the line, it doesn't make sense to buy a policy with maternity cover built in, because you'll be paying for those maternity benefits throughout the course of your policy term, and that can be expensive. So if you have sort of something planned already, or at least you're thinking 2-3 years down the line, I'll probably plan for a pregnancy, then it makes sense to perhaps add this on, right? Usually you'll have a couple of years of waiting period, so you can finish that off, and then you can also have maternity benefits covered. One add-on that I feel like more people should now consider is there's something called as an instant cover add-on, which basically cuts down the waiting period, in some cases for all illnesses, but in some cases for specific illnesses, like say blood pressure, diabetes, or let's say asthma, right? So then even if you have blood pressure, and even if you get a heart attack, even if you have cholesterol, you can get a heart attack, say 1 year down the line, insurance companies still have to cover it, right? The only caveat is that a lot of people find this out, and then they want to add this during renewals, and insurance companies don't allow it, right? Several insurance companies don't allow it. So if you're buying an insurance policy, even though it costs you maybe 1,000, 2,000 rupees extra, I believe that this could be a valuable add-on to sort of tag along with your insurance policy. So yeah, that's my sort of suggestion.
Wow. That's a lot of pointers to note down on. So, Shrehith, a bunch of things that you mentioned were more on the, claims, and it's basically, expense management at the time of, you fall ill.
Yes.
There are certain also add-ons that I see, which is more like, one-time payments in case you get like a critical illness or accident.
Yep.
What's your view on that? Should we opt for those kind of add-ons or riders?
Right. So the critical illness bit is again, once again, very interesting, because you have critical illness payouts both with health insurance products and term insurance products. Now, what we recommend at Ditto is that generally we want to make sure that you use health insurance only to take care of the expenses related to the course of hospitalization.
Okay.
What that means is, if I'm hospitalized for 8 days and the cost of treatment adds up to a certain figure, then the health insurance policy should take care of it, right? When you think about something like a critical illness, for instance, don't just think about hospitalization expenses, think about other expenses as well. And so we recommend people to buy a term plan. And usually whenever somebody buys a term plan, we tell, add a critical illness benefit alongside. So for instance, if you're buying, let's say if you have a 1-2 crore term plan, you could have a critical illness benefit of say 20-30 lakhs by paying for it. And that 30 lakhs is paid out as a lump sum. And so this you can use to compensate for your loss of income, loss of pay, travel expenses, other expenses that may come up during the course of hospitalization, and for the hospitalization itself. Because the insurance company, say a health insurance company, doesn't pay for 5% of the cost, then you can supplement that 5% with say your critical illness payout. Now with accidental deaths, it's once again something that I've sort of struggled to wrap my head around, because let's suppose I'm talking about death as sort of an event, right? Now, the way I think about it, me personally, is that if I die at this very moment, the payout from the term insurance policy or any insurance policy should contend for all the expenses that may come up for the next 15, 20, 25, 30 years, where I would have had to bear those costs for my family. So, if I'm thinking about it this way, I don't care about how I die, whether it's through an accident or whether it's through a non-accident, through an illness, doesn't matter, right? Irrespective of the conditions of my death, I should have enough to bear the costs of all of my expenses, my future expenses that may accrue in my absence, right? So my sense is that if I'm buying a policy to cover for these exigencies, then I should cover for all these exigencies. Doesn't matter how I die. So accidental death benefit is something that I've not thought about aggressively. And I don't personally recommend it to people. Some of our advisors have illustrated use cases where it may be useful. For instance, if you're constantly traveling out of town, doing hazardous jobs, etc., perhaps, right, maybe throwing in an extra sort of payout for these specific instances makes sense. But for most people, I feel like irrespective of the manner of death, I think you should cover for all exigencies, right? So a single payout with your term plan, irrespective of what happens, I think should cover for it. So that's how I think about it. Yeah.
Got it. So as you said, right, for these single one-shot payout things, your term insurance is better, and I think good point to turn to life insurance, right? And I think life insurance for us growing up has always been LIC. And now, with the whole ULIPs and, it's being wrapped around with the investment come insurance, while insurance should be actually an expense. What's your view on, this entire life insurance industry in general? And if I have to buy a life insurance, right, what is your recommendation to me as a 30-year-old?
Right. Once again, I think the life insurance industry has gone through a sea change, right? I think early on when you talk about LIC, etc., they've done so much, right, to improve financial literacy. I know people may contend with this and say, well, not the case, etc. But you have to think about an India where, access to, say, things like mutual funds were reserved for a small subset of people. LIC did a bulk of the job of sort of making sure that even people who may not have access to traditional financial instruments, they get access to some degree of protection. But I think going forward, or at least in the last, say, 10, 20 years, there's been a shift in thinking, right? When you think about investing, you think about mutual funds, you think about your maybe fixed deposits, you think about equities, bonds, etc. And some people still perhaps think of savings products, endowment products. But by and large, it's separate from what protection should mean. Protection should entail these one-time black swan events, right? Something happens to me, my family should be taken care of. And in that context, I think a pure term insurance plan. What I mean by that is there's no savings component, you get nothing. I'm 30 right now, I buy a plan today, I'm covered for the next 30, 35 years. And between this point and then anything happens to me, I die, my family should get a massive payout. And by massive, I mean at least upwards of 1 crore. Perhaps for high income earners, it could be 2, 3, 4 crores, right? And this income should be delivered tax free, which is the case with term insurance. So you get the 2, 3 crores, 4 crores, whatever the sum is, you set it aside in a bank, a fixed deposit, the principal and the interest should cover for all future expenses, right? That's how you think about term insurance. And this is it's a vanilla product, it's a simple product. And the biggest benefit of term insurance is that if you're buying it early, especially when you know that you're planning for the future, you get ridiculously accessible rates, right? And the premiums are fixed. So for anybody young, even if you're in your early 30s, it makes sense to buy a term insurance plan early, not just because it's affordable, it's also because it is accessible at this age. What I mean by that is, if you contract any illness, let's say abnormal lipid profiles, you have to pay much higher premiums, or in some cases, you may not even get a plan.
Got it. Great, Shrehith. I think it's been like a masterclass in insurance and, lots of practical advice here.
Right.
As someone, who has been in industry, wanted to ask from a more industry perspective, I was also recently reading on 100% FDI in insurance. What, in your opinion, is like, the future here, and, premiums are likely to go up or down? What will be the implication on the end user here?
I think we've already seen the premiums rise considerably. So much so that I remember in the first year of Ditto, we tell people that if you're buying a health insurance policy, one of the things that you could potentially do to mitigate, say, for example, price hikes, is lock in a plan for, let's say, 2 years, 3 years, right? Now, people are actively seeking our sort of advice on whether I should actually lock in a plan for 3 years, because now they're like, I'm terrified about the prospect of price increases, and I'm not basing this off of insider information or something that I know endemic to the industry. I'm simply basing it off of how I've seen the last 3 years pan out, right? Price hikes are so frequent that every 2 months we are telling our customers, look, this company is increasing prices, this company is increasing prices, right? And I don't think FDI in insurance, etc., is probably going to help, because the insurance industry is built in that manner, right? But what's ended up happening is there is sort of this pressure on insurance companies to make the current economic model work. However, insurance is an extremely sort of it's a push product, right? So they're spending a lot on sort of, marketing, distributing the product, so much so that claim processing becomes very difficult. Despite the rising premiums, when it comes to claims, still you have the same sort of problems. It's not like that problem is going away at all. In fact, one of the things that I've seen a lot of customers do because of the price rises, etc., is that they try and find these small hacks, right? So for instance, one of the hacks that a lot of people do is they buy a base plan for, say, 5 lakhs, and then they buy a super top-up plan.
Okay.
Right? What that means is the insurance company will say, first pay the 5 lakhs yourself with a deductible of 5 lakhs, and then any costs above that point, I will bear the cost. So super top-up plan works that way. So the first 5 lakhs, it doesn't pay. But if you pay that yourself, or let's say you pay that through another health insurance plan, the remaining cost beyond that point, the super top-up plan will cover, right?
Okay. There's no upper cap.
There's usually, the upper cap is so high that it doesn't matter. Okay. So it's usually up to 1 crore, for instance, right? And the premiums are very, very sort of affordable as well. So you end up paying, let's say, 5-6K. So they feel like that's a great option. Okay. But here's the truth. What happens is insurance companies also measure their ratios, right? Your financial ratios, performance ratios, as any company does. If you feel like, look, I'm not doing well on my capital employed, what do? Well, you either try to get more out of the capital that you've deployed, or you try and see that, okay, fine, I should probably spend less. Insurance companies look at it in the same simplistic manner. What they see is, look, my loss ratios are going up. What that means is I'm collecting X in premiums, but I'm paying, say, 80% of that X in claims or other costs, right? So I'm like, well, I probably shouldn't be paying that much there. So if you are only paying, let's say, 6,000 for a super top-up plan, know that there will be increased scrutiny, that insurance companies will use the fine print to reject your claim at any point. And so even though it looks like a great product on paper and something that we recommend also for certain cases, know that it comes with caveats, right? So the trend, despite where the industry is headed, seems to me that there will be more sort of excessive use of the fine print that I talked about, and also the fact that the premiums keep rising gives me a sense that it probably won't be stopping unless there's a regulatory intervention at a massive level. Right? The regulator won't cap prices for everyone. That would be disastrous as well. But I suppose they will probably start doing things that will be more beneficial for customers from, let's say, a claims perspective or something, right? So that insurance companies now realize that, look, we can't just keep expecting people to pay these high premiums while also not servicing them adequately during the time of claims.
Got it. Since we're talking about different companies, different insurance companies, a question comes to my mind, so now we have cracked the right policy, the copay, we have gotten our hygiene checks right. Now, when selecting different companies, is there also certain framework or recommendation that you would have for a user who is picking it by themselves?
Right. So my sense is that, once again, this depends on your sort of relationship with sort of the insurer, right? And what I mean by that is, let's say you're somebody who endemically trusts, say, government-backed insurers, right? You feel like, okay, look, public sector insurers, that's my thing, right? Then you should go for it. Now, the question is, so then why is there so much kitch, right? What happens? Well, one of the reasons is because most people decide they want to buy their insurance policies directly. And that is, in my opinion, where most of the problem comes in. It doesn't matter what insurer you pick. You can do some hygiene checks. You can probably look at claim settlement ratios. You can probably look at amount settlement ratios. You look at insurance track record. You can look at the complaints volume. And you can find all of this information on IRDAI's website, annual reports, etc. But each one of these metrics has problems, right? Because any of these metrics you can possibly fudge. 1 year you can fudge, for instance, right? I've seen insurance companies improve their claim settlement ratio 1 year, and then suddenly next year it's back to square one, because that year they're probably doing an IPO, for instance, right? I mean, you can do it, right? It's very useful, which is why it all boils down to who's on your side when you have to make a claim, because you cannot trust the insurance company to treat your claim fairly. Like, I believe that. And in my case, what ended up happening was I petitioned, I wrote a couple of emails, and the only time when things started moving was when I started threatening them to escalate it to the ombudsman. And then eventually they got in touch with me. And then finally we had a court discussion, and then finally it got, settled.
Oh, got it.
Yeah.
Great, Shrehith. I think learned so much about insurance today, and we spoke so much on this. Also want to understand about you. You have been in this industry and you started this, right out of B school.
Yeah.
Tell us more a little bit about your journey, how it has been last, almost like 10 years. And how did you navigate your finances when you were setting up this company?
I had worked for a year right out of college as a instructor, as a teaching instructor at a coaching institute. And then I did my MBA for the next 2 years, and I opted out of placements again. And by this time I was probably 25. Yeah, 25. I was graduating B school and I was 25. Practically broke. I think I had a loan of close to 20 lakhs. And at that point in time, I had enrolled for a entrepreneurial fellowship. And as a consequence, we got about 40,000 in stipend every month. So with 40,000 now, we had to build a startup, we had to pay our EMIs, and we had somehow figured out how to live in Ahmedabad. I think the way we made it work is, luckily I was in a very privileged position because my parents weren't dependent on me, and my friends as well, right? Their parents also perhaps weren't as dependent on them, and so they could take care of their expenses. So it's fairly easy for me to navigate, but there's no saving, there's no investing, there's nothing, right? And once Zerodha came in, obviously we could start taking a salary, but that salary has to be modest, right? I mean, you can't suddenly start paying yourself a massive salary just because you've raised some money. So looking back, I think that was perhaps not the right choice. I think we were very frugal. We were taking, I think even after this thing, we were taking like 60,000 a month. So without the stipend, it was just the 60,000 coming in. And after paying the EMIs, everything, you're again practically broke, right? Then as the company started doing well, only after Ditto, right? When we started making revenue, because until then, the first 3 years, we were just experimenting with content. Content didn't make any money. We experimented with a couple other things that didn't make money. And Ditto started making money. And that was the only time when we could afford to pay ourselves a decent salary. And I started thinking about, okay, let me figure out what to actually do with my money, etc. But that again, you should have money to actually invest money. So that probably happened maybe a year and a half ago, right? And since then, I've probably done the fair, it's the bare bones stuff, right? Probably a few index funds, probably occasionally I'll probably write about something, a stock, etc., and I'll be like, you know what, I'll set aside that money. None of them have done well because obviously I don't have the time, the patience to actually study this intently. And even if I did, I don't think I'd be a very, very successful investor in that sense. What I believe, in my opinion, for entrepreneurs in general, is that your best returns are probably investing your time and energy in the startup, because that is, for me, 100x my sort of investment in terms of effort, money, etc. And I think any other stock I invest in, etc., is not going to yield a return that's probably going to be greater than the investment that I'd probably get out of Ditto and running Ditto and Finshots.
So, Shrehith, we found out a couple of interesting questions on internet, and I would like to, ask them to you because you've been the expert here. So, the first question is, for a 35-year-old male who is hospitalized after a road accident and the health insurance claims was rejected due to a missing document, what should this person do?
Well, the nature of the missing document is that, look, the insurance company has to verify the veracity of your claim, and to that extent, you have to provide the documentation. There's no other way around it. If they approve every claim that comes through without the appropriate documentation, it is likely that they'll approve a lot of the frivolous claims, and they may not have enough money to pay out the legitimate claims eventually. So it's sort of something that you can't get around. So the only way to deal with this situation is to somehow petition your doctor or your agent or the insurance company to figure out exactly what the missing piece of document is, and just submit it as soon as you can, because you can get this processed effectively and close it as soon as possible.
Got it. Another question, interesting one. So there's this 40-year-old son who is looking to insure his 70-year-old father and facing high premiums due to age and pre-existing conditions. So he's now uncertain whether he should go for the policy or not. What's your opinion?
Right. So you're right. At the age of 70, especially with pre-existing conditions, I've seen insurance premiums shoot up to close to 1 lakh for, say, a 10 lakh policy, right? And at that point in time, yeah, your options are fairly limited. One of the options is to consider maybe having a copay clause included. I said copayment is bad, but in such cases, maybe if you copay 10-20% of the bill, then maybe the premiums could come down. Also limiting some features. So some insurance companies may offer you the provision to downgrade the plan to a certain extent, maybe going from no room rent limit to maybe a single private room, etc. So these are some tiny hacks you can do to get down the premiums. However, the decision ultimately boils down to whether this is an expense that you can bear. If it's an expense you still feel like you can bear, then I would suggest still continuing with insurance, because laying out, let's say, 5, 6, 7, 8 lakhs or even higher, outlays on, say, for example, medical bills may not be feasible, but paying this could be feasible. So it depends on whether you can afford it right now. But if you absolutely can't afford it, obviously there's nothing else you can do. You'll have to forego the plan at that point in time.
Another question is from a 52-year-old woman who didn't read the policy clause and took out a health insurance without reading it, realized that her major illness wasn't covered in her pre-existing condition clause. Okay. So now she's unsure if she should change policy or if there is any other alternative.
Right. So there are 3 scenarios here. The first scenario is, letting status quo persist, which is to say that you don't do anything, let it be, bygones be bygones, and you don't mention. Bad idea, because the insurance company will find out. When you make a claim, trust me, they have so many ways in which they can figure out if you've hid a pre-existing illness, or if it's not mentioned, it will be denied. So that means your money is going to waste anyway. So I wouldn't suggest that. Now, sticking with the insurance company and explaining to them that this is what happened. There are a few things that can happen here. Some insurance companies will endorse this. They'll include this as a pre-existing condition. They'll ask you to serve the waiting period. They may even ask you to pay a higher premium. But I've also seen insurance companies reject the plan at that moment in time and say, look, you've not been forthright with your disclosures, so we'll be not continuing with your plans anymore. That's it. End of our relationship. So yeah, that's one way to go about it. The final way is to obviously go buy a new insurance plan, and that's an option as well. But this time, hopefully, you'll be able to honestly disclose everything and also make sure that you're not missing out on something because you weren't aware of it, right? So those are the 3 course of actions, and it depends on what you want to choose.
Got it. Interesting ones and definitely tricky cases that made it to the internet. But I think that's a wrap, and I had such a lovely time and so much of learning in today's conversation. So thank you so much, Shrehith, for taking out the time. It was a pleasure.